Welcome to the Deep Dive. Today we're taking a close look at Asia United Bank, AUB. Welcome back, everyone. We're diving deep into Asia United Bank, AUB, today.
That's right. We've got their 2024 Sustainability Report and the amended annual financial statements also for 2024.
And our mission, really, is to pull out the crucial insights for you. Understand AUB's health, their growth, profitability, loan quality, what management's thinking.
Without getting totally swamped by the numbers, we want to connect the dots between the financial data and their broader strategy and outlook.
Exactly. Kind of like checking the vital signs of the bank.
Yeah.
So let's jump straight into financial growth. The statements show a pretty clear upward trend from 2023 to 2024.
Definitely. Net income, for instance, went from roughly 11.4 billion pesos in 2023
to over 15.1 billion pesos in 2024. That's quite a jump.
It really is. And their total operating income saw a similar positive move.
Yeah, from about 17.9 billion pesos up to, what was it, 21.3 billion?
Precisely. Around 21.28 billion, to be more exact. So solid top-line growth, too. It seems like AUB is really accruing success. Sorry.
Huh. Okay, point taken. Let's put some percentages on that growth, though.
Good idea. For net income, that jump from 11.35 billion to 15.13 billion pesos works out to, let me see, about a 33.2% increase.
Wow, over 30%. That's significant.
It is. And for the total operating income, the rise from 17.9 billion to 21.3 billion pesos is roughly an 18.9% increase.
Still very healthy growth on the income side.
Right.
So we're making more money, but how efficiently are they doing it? Let's talk profitability metrics.
Right, like return on common equity, or ROCE, which basically shows how well they use shareholder money to generate profit.
Also, return on invested capital,
Yeah.
ROIC, which looks at returns on all the capital used, right?
Exactly. Now, for ROCE, we can calculate that from the financial soundness indicators in the AFS.
Yeah. What did you find?
Well, for 2024, the ROCE was 12.86%. That's based on the 15.1 billion net income and average equity of around 117.7 billion pesos.
And how does that compare to the previous year?
It's an improvement. In 2023, it was 10.59%, calculated from the 11.35 billion net income and about 107.2 billion in average equity.
So they're getting better at turning shareholder investments into profit. That's a positive sign.
Definitely a positive trend, yes.
What about ROIC then? And crucially, how does AUB stack up against, other big banks in the Philippines?
Well, that's where we hit a bit of a limitation with these specific documents.
Oh.
Yeah, the ROIC figure isn't explicitly broken out or calculated in the AFS provided, so we can't give you a precise number for that based just on this.
Okay, so no ROIC figure. What about comparing the ROCE to peers?
That's the other thing. These reports, they show AUB's own performance, but they don't actually provide the comparative ROCE or ROIC data for other banks.
Right. So we see AUB is improving its own ROCE, but we can't really benchmark it against competitors using only this information.
Precisely. It's an important caveat based on the source material we have.
Understood. So let's dig into what is driving AUB's profitability then. What generated the most income for them in 2024?
Unsurprisingly, the biggest chunk comes from net interest income. That's the core banking function interest earned on loans minus interest paid out.
Makes sense. How much did that grow?
Just looking at loans and receivables, it went from about 13.75 billion pesos in 2023 up to 15.14 billion in 2024. So that remains the main engine.
Okay, the primary driver. What came next in terms of contribution?
That would be other income. It's a broader category, includes things like net gains from trading, foreign exchange gains, miscellaneous income.
And did that grow as well?
Oh, yes, quite substantially. It jumped from about 4.15 billion pesos in 2023 to over 6.13 billion in 2024.
That's a big leap. What's in that miscellaneous part?
The notes mention things like rental income from investment properties, lease income, maybe gains on selling assets, stuff like that.
Got it. So strong performance from both core lending and these other income streams. But what about costs? Did expenses eat into those gains?
They did, naturally. Operating expenses, excluding the loan loss provisions, rose from about 6.5 billion to nearly 6.9 billion pesos.
Okay, an increase there. And taxes.
Taxes also went up from roughly 2 billion pesos to about 2.5 billion pesos. Higher profits usually mean higher taxes, so that's expected.
Right. What about provisions for bad loans? Did those increase?
Interestingly, no. The provision for credit and impairment losses actually decreased slightly from 1.625 billion in 2023 down to 1.570 billion in 2024.
Huh. So even with growth, they provisioned a bit less.
Seems that way, based on these numbers.
So pulling it all together, the big gains in net interest income and other income more than offset the rise in operating costs and taxes, leading to that net income jump we saw earlier.
Exactly. Revenue growth just outpaced expense growth. Simple as that, really.
Okay, let's shift gears to the loan book itself. How healthy is it? We should look at the non-performing loan ratio, the NPL ratio.
Right. That tells you the percentage of loans unlikely to be repaid. Lower is generally better.
And what do the numbers show for AUB?
According to the AFS financial soundness indicators, the net NPL ratio for the whole group was 1.29% in 2024.
And how was that compared to 2023?
A slight improvement. It was 1.34% in 2023.
Okay, so moving in the right direction. What about the parent company alone?
Even better there. It was 1.15% in 2024, down from 1.19% in 2023. So, yes, positive trend suggesting good management of credit quality.
That sounds pretty low generally, but the report actually makes a bolder claim, doesn't it?
It does, and this is quite noteworthy. The commentary in the financial soundness section explicitly states that AUB's NPL ratio is at par or even better than most big banks.
Wow. So they're not just low, they're comparing very favorably to the major players in the Philippines.
That's what the document claims, yes. It's a strong statement about their portfolio health.
Definitely reassuring. Okay, let's look ahead now. What does AUB management see coming down the pike? What risks and opportunities are they highlighting?
Both reports touch on this. On the risk side, the sustainability report specifically calls out reputational risk linked to anti-corruption efforts.
Affecting stakeholders across the board, presumably.
Yes, clients, employees, stockholders, suppliers. It also mentions the obvious risk with lending. Borrowers who may not be financially capable to repay.
And how are they managing that?
Their stated strategy is thorough assessment prior to loan approval for all sorts of loans, home, car, commercial, etc.
Due diligence, basically.
Pretty much. The AFS notes also talk quite a bit about credit risk management, setting limits, monitoring exposures, checking industry concentrations.
Did they flag any issues with industry concentration?
No, actually. They explicitly state they were within the BSP's regulatory limits for industry concentration at the end of both 2024 and 2023.
Good to know. Any other major risks mentioned?
Well, the Form 17A lists the standard banking risks you'd expect. Liquidity, market risk, foreign currency, credit, operational risk. They seem to be keeping a close account of potential issues.
Okay, I see what you did there. All right, enough risks. What about the upside, the opportunities?
The sustainability report points to a few, like improving anti-corruption awareness through regular communication with staff and suppliers.
Okay, strengthening governance.
Also promoting efficiency and sustainability by sharing knowledge on energy and water use. Knowledge dissemination, they call it.
So environmental and operational efficiency goals.
Right. And interestingly, under employee management, they see an opportunity to expand their wellness programs to specifically address employee mental health.
That's quite timely and important.
It is. Then, on the more direct business side, the Form 17A mentions opportunities from launching new products.
Like what?
Things like the AUB Dollar Money Market Fund and also their new virtual card program, which they partnered with MasterCard on.
Ah, so product innovation to attract or serve customers better.
Exactly. They mentioned this virtual card could help facilitate payments for fintechs and buy now, pay later lenders too, so tapping into those newer financial ecosystems.
Interesting. Seems like a mix of strengthening the core and exploring new avenues. And didn't the sustainability report mention something about local suppliers?
It did. Their spending on local suppliers is apparently close to 100%. That's more local than finding a peso for your thoughts.
Huh. Nice one. Okay, so let's try and wrap this up for our listeners. So what we've seen from these 2024 reports is, well, pretty solid financial growth for AUB. Net income and operating income both up significantly.
Right. Their profitability metric, ROCE, also improved, showing better use of shareholder funds, although we couldn't directly compare it to peers with this data.
And critically, their loan quality, measured by the NPL ratio, looks very healthy, improving slightly, and, according to them, better than many larger banks.
Plus, management seems actively engaged with both managing risks, reputational, credit, operational, and pursuing opportunities, from sustainability initiatives to new digital products.
So this deep dive hopefully gives you, the listener, a clearer picture based specifically on these documents.
Right.
A shortcut to understanding AUB's recent story.
It's a snapshot based on their own reporting for 2024.
Definitely. So maybe a final thought for you to ponder. Considering this performance and outlook, what do you think is the biggest opportunity or perhaps the biggest challenge facing AUB in the coming year?
And maybe think about how their focus on things like sustainability or these new virtual cards might play into that future.
Good question. Something to mull over. As always, we encourage you to look at the full reports if you want the complete detail. Thanks for joining our deep dive today.
Liked what you heard? Drop a comment, like, and share this episode. Hit subscribe and tap the notification bell. We've got more insightful market ideas coming your way. Catch you on the next one.